The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Here are a couple of more value stocks that our value strategist Tracey Ryniec thinks you should know about. And she's with me now to kind of tell us about them. So spring is not too far off, according to the meteorological calendar. And with that, some people think about new home building.
That's right.
So
got to get that house.
To keep in time with that little theory. Sounded nice, didn't it?
It did.
You have identified PulteGroup PHM, the ticker, as a value play.
Most people know this home builder. It's one of the largest in the U.S. It's in most major markets, has a lot of different brands, including its own Pulte. But it also does the Del Webb, which is the adult communities as well. You know, home builders have just been building homes the last couple of years, and they've been helped by the low mortgage rates. Prices have been increasing. Pulte has been seeing an increase nearly every quarter. I know it was up another 6% last quarter to a little over $350,000 for their average price. So that's one thing that makes me a little cautious on the home builders. But with these low mortgage rates, things are still affordable. People are still buying. You can see analysts expect good things coming up this year and next year. Earnings estimates are jumping quite a bit here. And we're supposed to see about 20% earnings growth again this year, coming off of a real solid 2015. Again, got to watch those mortgage rates, but people do expect this spring selling and buying season for these guys to be good. Their backlog grew last quarter, and their new orders are growing, so people are definitely out looking. You have a little bit of leeway between when they actually get the order and then the house actually closes, but all those metrics look good.
The builders must have some confidence, because I saw one of their peers, a large, public company, production builder, starting a new development out near where I live. So if they thought
in western Chicago,
in the western suburbs of Chicago, so if they thought that the environment wasn't right, I don't know that they'd start a brand new development.
That's right. They are starting a lot of these newer developments. They've got the land, and the demand is back. And again, the low mortgage rates are helping, and low inventory is really helping them, both with existing homes and new. And a lot of people like the new, and they just do. So that inventory is still low, and these are good conditions for them. But the problem is, with the stock at least, it hasn't done anything for several years. Some people might remember in 2012, that was the bottom of the busting of the bubble for the most part. These shares were all cheap, all the home builders, and then they soared in 2012. That was the #1 sector in 2012. But after 2012, they've just kind of, as you can see, I put it up here, just been treading water, haven't been going anywhere. That's why you do have a value situation here with the forward P of 12, double-digit earnings growth, but no one really believes that this is going to continue or something. Like, the investors are still just kind of holding back, which is where you do get the value play here.
Yeah, good dividend.
Yep, you're getting like a 2% yield here. That's not a bad thing to have if you're going to be holding in this stretch here. But I do think the home builders might, see some kind of breakout soon from this treading line that they've been doing the last couple of years, at least in the stocks, because the fundamentals are still real solid.
All right. Well, if you're looking for a new home, you may need a bank, as you alluded to. And along with that, you've got Banc of California as one of your value identified
Bank
companies.
with a C, I noticed. Not with a K for some reason. Got to be different. But I've never covered Banc of California. It is a small regional bank with about 600 million market cap, and they have about 100 offices in California. I like the regional banks here, even though the Fed has only raised once and apparently may not be raising quite as many times this year as we thought. The raising of the rates will help them, but I still like where they stand, because eventually the Fed will raise rates and it will help them more.
You think the regionals are in a better position here than the big banks?
Yes, I like the regionals so much better. They are pretty, solid. The ones who've survived the bust, which these guys have, and they're seeing the assets build. They just announced a $70 million share offering. And at that time, they said that their assets were expected to grow more this year than expected. They only thought about 16%. Now they're seeing somewhere between 20 and 35%. So the analysts all like that. You start to see these estimates really pop up after they release this information in regards to the secondary. And analysts think that it's still cheap. It's trading with a forward P of about 10. That isn't such a big deal for the banks, but it does have the good return on equity and some of these other good banking fundamentals that you need. And you can see the chart. This one's a little different than the Pulte. We are near the couple, multi-year highs here, but I don't think that the story is done with these regional banks. I do like them. California economy is good right now, so you got to factor in that aspect. And I do like the banks.
Good dividend here too.
Yeah, 3% yield. So that's not a bad thing either. I do like the dividends right now if you're going to be buying some of these stocks that, are seemingly a little riskier and a little more volatile.
All right, yeah, it gives you a little something extra.
Yeah.
Do you own either one?
I do not.
All right, check out other stock information, commentary, stock picks, and a lot more on our website, Zacks.com. If you're not there already watching this video, get on over. You can link to all of that information, data included, right off the home page. With Tracey, I'm Terry Ruffalo.